Welcome to Chairman's Briefing, your source for the week's top mining headlines. My name is Rachel Lee. After a period of consolidation, both gold and silver have snapped up back into a position of strength. Silver is now back above the $30 level. Those with a technical bias may say this price action represents a clear breakout. Talk of a potential Trump victory has raised concerns about a renewed trade war between the U.S. and China, a row that could trigger multiple geopolitical economic shocks and a rush into gold. Precious metals analyst Seth Horatius stated, quote, "While the Biden administration preserved many of Trump's China tariffs and raised tariffs on only a small basket of Chinese clean tech imports, a second Trump administration could escalate the trade war." Trump has proposed two significant trade policy agendas, imposing a 10% across-the-board tariff on all imports from all countries and imposing tariffs of 60% or more on all Chinese imports. Also favoring the metals, the ADP Research Institute reported that job creation among private employers slowed for the third straight month. 150,000 jobs were created in June, below consensus forecasts calling for 170,000. The weaker than expected jobs report bolstered investor confidence that the Fed will cut rates before the year is through. As of July 2nd, copper rose for the third day, bouncing back from a 2-month low. Investors are optimistic about potential stimulus from China and possible rate cuts in the U.S., especially with the prospect of another Trump presidency. Increased withdrawals from London Metal Exchange warehouses in South Korea are also bolstering prices. Copper is now trading at about $9,600 a ton, but remains below its May peak of $11,100 due to high global inventories and weak demand from China. Production from Chile, the world's leading producer, is showing signs of recovery despite suffering steady declines due to operational challenges, declining grades, and aging ore bodies. According to data released by the country's Bureau of Statistics, output in May was the highest this year, rising more than 8% compared with both April and the year earlier. And authorities are looking for even more increase in countrywide copper output this year because of expansion at the Quebrada Blanca mine and improvements at BHP's Escondida. To maintain output, though, the country's aging mines will require a boost in water and energy over the next 10 years, according to Cochilco, the state's copper commission. Industry sources told Reuters that surging copper prices this year have brought startling growth in the number of trucks carrying copper from illegal mines in Peru, jamming roads, causing accidents, and creating hazardous conditions, especially after dark. Next, lithium bears appear to have the upper hand. It's been a world of hurt for those with heavy exposure to the battery metal. Betting on the next bull run is turning into a mug's game. But this current landscape is where contrarians prefer to frolic. According to Fitch Solutions BMI, the lithium market has entered a new normal period of stability. They believe the price spikes we saw are now a thing of the past. This stabilization is primarily due to a rapidly expanding global supply, which has already pushed the market into surplus. It's expected that prices will remain below the peaks of 2022 and 2023 for at least 5 to 10 years. Argentina has seen just one new mine come online in the past decade. 4 new projects will finally begin to churn out lithium in the weeks and months ahead, according to an unreleased federal government timeline seen by Bloomberg News. This will ramp up annual capacity by 79% to the equivalent of 202,000 metric tons. But the timing is far from optimal. For global lithium markets, the extra production comes at a time when buyers are already well supplied, with inventories piling up and the gloomy outlook for electric vehicle demand. Spot prices of lithium carbonate in China have slid to the lowest since August 2021. In the wake of the landslide event at Victoria Gold's Eagle Gold Mine in Canada's Yukon Territory on June 24th, details concerning the damage to infrastructure and the environment remain, well, sketchy. The landslide that took out the heap leach pad and surrounding infrastructure was unlikely a one-time event. There's growing concern that more ruin is on deck. Dave Petley, a leader in landslide analysis, expressed his main concerns to the Northern Miner via email last week. Quote, "The first concern is the potential for release of sediment or fluids beyond the mine boundary, a pollution incident. The second is the possibility of further mobilization of the landslide mass, in particular as flow failure. The third concern is the possibility of a further failure of the heap leach. The rear scarp of the main rotational landslide is very steep, so instability is possible. Residents downstream of the mine, including the White River First Nation, anxiously await test results for water samples taken from different sites around the mine last week. Now, the concern is cyanide entering the groundwater. Test results are due at any time, and we'll be watching. Now, with this being the second landslide to occur this year since January, the company faces looming debt and growing speculation that this leach pad failure will ultimately lead to the company's demise. The downward spiral in the stock is amplifying those concerns. And on the other side of the globe, a toxic leak from Endeavour Mining's operations in southern Ivory Coast sickened people and killed fish. On June 23rd, a valve rupture at its Ity mine released 3,000 liters of cyanide-laden mud into a canal, reaching the Cavalli River. The pollution is now under control, and Endeavour has promised to provide clean drinking water to affected communities until the cleanup is complete. No human deaths have been reported. Endeavour Mining, the largest listed miner in London and also traded in Toronto, operates primarily in West Africa, including Senegal, Ivory Coast, and Burkina Faso. And First Quantum investors see hope. News that Panama will conduct an environmental audit of the Cobra Panama mine to determine whether it can safely reopen was welcome news for investors. Shares jumped 5% on July 2nd. President Molino, who just took office, made the announcement in his first address. Quote, "The plan to open and definitively close the mine in a safe and positive manner for the country will depend on results of that environmental study." The U.S. is bidding to eventually buy up to $2.7 billion of domestically supplied enriched uranium in an effort to boost the supply chain for the nuclear reactor fuel and to steer itself away from Russia. Russia, the world's top seller of enriched uranium, has been supplying about 24% of the fuel used by U.S. reactors. The Biden administration has blocked the construction of the 211-mile Ambler Road in Alaska, which was intended to access rich mineral deposits. Originally approved during the Trump administration, the Ambler Road would have disrupted habitats and affected over 30 Alaska Native communities. Ambler Metals, exploring the area's copper, zinc, and gold resources, faces a significant setback. The proposed mine was expected to produce substantial amounts of copper, zinc, lead, gold, and silver over 12 years. Norway announced the opening of large areas in the Arctic region for its first seabed mineral licensing rounds. The area comprises about 38% of the 280,000 square kilometers approved by Parliament for exploration earlier this year. Mexico wants to make a deal. Mexican President Obrador said that his government would seek an agreement with Ganfeng after the Chinese lithium miner initiated an arbitration case against the country's government over a canceled mining concession for an advanced lithium project in the state of Sonora. There is currently no commercial production of lithium in Mexico. We'll wrap it up here this week for CEO.CA. Follow us on YouTube and hit the notification bell to catch the next chairman's briefing every week. I'm Rachel Lee, and we'll see you soon.